Hello and welcome to the latest edition of The Exchange, live from the floor of the New York Stock Exchange. I'm Douglas Jonas, your host. As a reminder, today's interview is for informational purposes only. The NYSE does not recommend investments or investment strategies. Now, I'm joined today by Dan Chung. He is both CEO and CIO of Alger. Dan, thank you for being here.
Thank you.
I want to talk a little bit about growth and value stocks. You know, you've talked a lot about growth and innovation in the growth sector, but of course, value seemed to make this peak a couple of months ago in the middle of the pandemic. What's happening?
So, of course, we're in the midst of an economic recovery from the pandemic lows of last year. And so it's natural that cyclicals, value stocks have had a strong rally on the backs of an economic recovery that is really a one-time event in terms of the longer term. In the longer term, we believe growth stocks, innovative companies that are leading their sectors are the way to outperform and have been outperforming for a long time. I mean, many examples of that today. The pandemic triggered an amazing shift in consumer and business behaviors. So one example would be in the old industry that we're in, financial services. The new fintechs are really beginning to revolutionize payments, credit. So companies like Upstart with artificial intelligence-driven credit scoring, or PayPal, one of the older companies, and yet still very new, revolutionizing e-commerce payments, as well as trying to become actually an all-encompassing financial services provider for consumers and businesses alike. On the other side, business. The world of business has changed. Remote work has really changed how businesses operate, and in many cases, we've learned we can do it. We're operating remotely at Alger extremely well, and many businesses learn from this experience. But it requires also massive changes in your network and software infrastructure. So we see a lot of companies accelerating their digital transformation. And that's not going to be a one-time event like an economic recovery. It's going to be a multi-year trend. So things like digital document and contract execution, of course, things like creative and digital advertising. And so we see a lot of opportunities in innovation that will continue to benefit companies and consumers for many years to come.
Now, as an active manager in an active management shop, how does your team look at this kind of universe of innovative companies and then narrow it down to the ones that you're going to focus on?
So it's interesting. We did a study with Greenwich Associates, and it identified that innovative companies do indeed intend to outperform the market and their competitors over the long term, but that many investors don't know how to identify what is innovative versus what is not. At Alger, we have a 57-year process, investing in positive dynamic change that looks for the most innovative companies, looks for the disruptors, and is based on our proven fundamental research.
Now, of course, you have an ETF your team launched here at the New York Stock Exchange early this year, the Alger 35. ATFV is the symbol. Could you tell us a little bit about the ETF?
Right, so the ETF is a 35 stock focused portfolio. It is the highest conviction, best ideas across our 55-person investment team, identifying really the best growth and innovative companies across market sectors. We're especially proud of the strategy and that it's named after our 35 colleagues who we lost on September 11th, and a portion of our revenues is going to charities in their memory and in their honor.
Such an amazing and impactful story, all surrounding an ETF, brought to you by Alger. ATFV is the symbol. Dan, thank you very much for being here today. We're live on the floor of the New York Stock Exchange. That's a wrap on today's edition of The Exchange, brought to you by the New York Stock Exchange, the home of ETFs.